right. Thanks for telling us that. Hey, oh, I see David Horn here. Awesome. That's like, hey, good to see you, David. All right. So shall we get it started, Michael? Or
yeah, we can start.
A couple of minutes?
I think we can start, and people might be dropping in. I think, but you can already start, I guess, with the intro, and yeah.
So what I'll do is I'll quickly take a moment, Kyle, to introduce DoDash, and then I'm going to move over to you and ask you to introduce yourself and MDI Ventures. And then, of course, we're going to get the things rolling from there. Sounds good?
Great. Sounds great.
All right. Welcome, everybody. It's great to have you here. And just give me a moment so that I can start my screen sharing. Hey. Okay. Does everybody can see my screen?
Yes, could just make it full screen. I think then, yeah.
Some issues?
I mean, you can make it full screen, and then I think, yeah.
It is full screen.
Yeah.
Not
almost. But, yeah. Just presentation mode. I think that's also fine. Okay.
Okay. Welcome everybody for this second edition of Nikhil's Investor Lounge. That's my Investor Lounge. I'm Nikhil Madan, and I'm a founder, co-founder of DoDash Capital Networks. So let me quickly give you a brief about DoDash. I mean, most of you out who are here, your biggest challenge is to raise capital. I mean, there's less than 1% of people actually end up raising capital, not because that their businesses are not good or their startup is not good. It's predominantly because their data assets are not sufficiently, they're not really good enough to create trust with the investors. So what we're going to do is I would cordially like to invite you to the community.
Nikhil, wait, I think you're maybe something one second. Maybe somebody misclicked. You're muted. Nikhil, you're muted. Just see now. Yeah, I think now it works. Yeah, please.
Okay. Do I need to start all over again?
Yeah, just community on that part. Yeah.
Yeah, great. So we welcome you to join us on in our community, where you'll be able to potentially learn the fundraising, the nuts and bolts of fundraising through free education, through community intelligence. You could potentially also make your businesses investor ready through expert feedback. There are plenty of experts out there on the community platform. And of course, investors notice you through our global community events, which like this one. Okay, now we talked about the community. Community is free for you to join, but what is exactly we are doing? What exactly is DoDash doing? We are building out an investability platform so that you are able to access over 42,000 investors who are part of this journey with us. If you want to go ahead, join the waiting list to get your access to the private beta. And in case, share it with your founder friends or your investor friends, and potentially you bump up your chances to get an early access to the investability platform. In addition to that, what we invite you to make use of over $25,000 of benefits which are there on the platform, which are essentially credits coming from people like AWS or several other service providers which are out there for you to use. They're all free. And the best part is all you have to do is to send in your pitch deck and you're good to go. This is the list of or some of the partners that we work with, and see whatever benefits you can utilize, and we can take a moment from here. And if you have any further questions, reach out to Michael. He's out there supporting me. And let's get started with our real star of the show, Kyle. So, Kyle, thank you very much. I'm going to stop sharing my screen. So, Kyle, thank you very much for joining in today and talking about MDI Ventures. I would begin by asking you one very easy question. What is MDI Ventures and what do you invest in?
Yeah, well, thanks for having me, Nikhil. I really appreciate it. So MDI Ventures is the corporate venture capital arm of Telkom Indonesia. Telkom Indonesia is Indonesia's largest state-owned entity. We're also one of the largest conglomerates in Southeast Asia. We do almost everything. We most notably known for the largest telecom within the region, but we're in healthcare, logistics, fintech, enterprise software. We're even in space solutions. So we do absolutely everything. We also have a broader mandate to help all other state-owned entities, which there's over 200 within Indonesia. And our primary objective is trying to find ways in which we can work with outside technology companies, whether that's in Southeast Asia or anywhere outside around the world that could benefit the group. Either we become a customer of, a reseller of, some form of partnership. But our goal is to work with the best technology in almost every single one of these categories that I mentioned. And we have the flexibility to do that. We have almost 850 million under management. We can write almost any check size from the earliest stages to the latest stages. Our goal is really looking at synergy and how we can mutually benefit by working with us.
Awesome. Thank you very much. Do you have any specific preference other than fintech, telecom related, or you're pretty much sector agnostic?
I argue that we're sector agnostic. Currently, we're looking at healthcare, agriculture, logistics, and fintech solutions.
Okay, awesome. Hey guys, make a note. He's looking for agriculture, fintech, and what else did you mention? I'm sorry.
Agriculture, fintech, logistics, healthcare.
Logistics and
Healthcare.
healthcare. All right. So if we have healthcare founders on the platform, keep shooting your questions. Okay, Kyle, I'm going to ask you some question, which is essentially to understand how often do you get pitched? How?
It's really interesting. We take a different approach. We don't as much or as often on a daily basis listen to technology companies pitch their company or their startup. The problem that we have is, we're looking at every startup across some of the biggest, industries globally and chasing what some of the best technology solutions for us. And for us, we actually spend more time researching and looking at every company and doing our own research and every company that exists globally, and then finding the ones that I think would better fit. So I would argue our strategy is slightly different, at least mine for outward facing, to look for looking at companies outside of Southeast Asia. Our seed stage team within Indonesia, investing in only Indonesia, typically tends to make those, almost daily meetings with startups that are just, coming up and kind of filtering through what are the new companies that exist that we're not really aware of in the ecosystem yet. So hopefully that answers the question.
Yeah, that does. That does. Thank you for that. Now that's about MDI, and I think we're getting a good picture about MDI. But tell
Mm.
us, how's Kyle as a person? How is,
Still alive, doing well, can't complain.
so
Uh,
how difficult is it to access you?
I mean, I'm pretty easy to reach out to if you connect with me on LinkedIn, or you can always shoot me an email. I'll read it. Um, the um, yeah, the challenge that for specifically the job speaking, my roles and the challenge that I have on a daily basis is my role is I have to convince my boss or my board or the board of directors of the telecom group what are the technology solutions that they should be working with. And I only actually get to meet them on a either biweekly or monthly basis. So I have to have a really compelling answer every time they chat with me about what is the best companies that they should work with. And I'm kind of the filter for them on the gatekeeper, unfortunately. But the a lot of my job and my day in and day out is uh, looking at spreadsheets and spreadsheets of thousands and thousands of companies, whether it's in specific industry or others, and then kind of making that building a report and then making a case internally about the companies that we should be talking to. So that it's a lot of research, I would say. Outside of that, sometimes I go surfing, so it's nice.
So you're on the West Coast?
Yes, in Los Angeles.
Okay, all right. So what kind of books do you read? What's been the recent book that you've read?
It's a good question. I haven't, to be honest with you, I haven't really been looking at a lot of books because I've been doing kind of like a degree on the side, which is just a um, certified financial analyst role. So I don't even have time, but to read. But lately, I've been big into a lot of Jordan Peterson's work. Just he has got a lot of philosophical books, ways that you can better improve yourself, just different perspectives that you can have on the world. I really enjoy those. I haven't. I'm to be honest with you though. I'm not a huge reader. I'm not actively. Maybe I should be. Uh, but I but a lot of times I think I'm a big, maybe I don't know if this is younger generation or not, but I'm a big YouTuber. I enjoy people that put a lot of time and effort into creating content visually and being able to share that and create a story, whether it's for entertainment, education, or whatever. So yeah, I don't know. Not any recent books.
Who inspires you?
Oh my gosh, that's a good question. I never even thought of that. Uh, hmm. Wow, that is a good question. I never thought. I didn't even think about it. I guess who inspires me lately? Honestly, to be honest, I think you can really pull depending on, like, it's like kind of saying like, what's your favorite movie? Sometimes it's I feel like it's like whatever you're watching or currently in the moment, what are you inspired by? And I think it should be a really actually, but one of the people that I'm inspired by lately is Mark. He's actually in the music industry. He's interesting because he came from Texas, and all he does is he freestyles. He just makes music up on the spot, and it tends to be super weird, and really ridiculous. But the reason why I liked him is because he kind of has the story of, um, you know, for over 10 years have been doing something that he doesn't necessarily like to do. He's worked various odd jobs and really kind of struggled to figure out that sweet spot and where he wants to excel within the music industry. And then, through I think very unique ways and grit, he's kind of figured out how to build his own audience and build his own, traction. And 5 years ago, he was nobody singing on the edge of a bar. And, you would never think of anything of him. And then today he's world tours and he's meeting some of the biggest celebrities in the world, and when you actually see people interview him, it's really interesting to see the amount of work and effort that he did to get to that point. You think he's an overnight success, but this is 15 years in the making. I think that translates to a lot of things, whether you're building a company, whether you're working on something personally, whether it is something that is in a different field. So I'd say he's currently my inspiration. I don't know if that's, it's not as interesting or as cool as an individual as maybe other people thought, but yeah.
Yes, inspiration is also transient, no? At different stages
Yeah.
of life and different walks of the where we stand in terms of our professional scenarios, isn't it? So,
Oh
which
yeah.
CEO do you follow other than your own?
Um, Follow in what sense? Like just making sure that I'm constantly keeping tabs on what they're doing,
Yeah,
or
yeah, yeah, yeah. I mean, somebody whom you really, I think we've uh, lost him.
Let's just see if I call on that. I guess while we wait and come back, Nikhil, maybe we can just check kind of like what some of the startups who are where we are.
Absolutely. So, tell us about the startups.
I think there was like one Ivan, I think he's working on a VIR. I think while we wait for Carl to come back.
Oh, Kyle is back in.
oh, hey, sorry guys, my Zoom dropped.
Not a problem.
Okay.
Can you hear me? Okay. I don't know if I think you asked me the question and you all froze. I don't know if you heard any of my answers.
No, we didn't hear, but the question which I was asking you, where we kind of
Hmm.
broke off, was what CEO do you follow on a regular basis other than your own?
Yeah. I think there's the CEOs you don't have an option to follow, which is like Elon Musk. You just hear him in the news, and
Yeah.
but you know, a lot of because when I do a lot of the research that I do, I map out industries, I look at companies from around the world, I figure out what are some of the best, most innovative companies per industry, whether it's cybersecurity, healthcare, et cetera. And I connect with a lot of the founders to be able to understand not only about their product, get feedback on my research, but that connection kind of allows me to follow their roadmap. And one of the CEOs that I connected with about a year ago was Medically Home, which is actually a healthcare um, that I'm pretty fond of the founder, and this is very inspirational. His father ended up dying in the hospital from a medical error. His father was able to survive some of the atrocities, wars, and things in the past. And the one thing he couldn't survive was a medical mistake in the hospital. And
Mhm.
he's kind of dedicated his life work into innovating how you can offer acute care services in a way that benefits everybody, not only the patient, but also the hospital, the payers, and this is something that can work universally around the world. And seeing such a challenging problem that they've been working on for years, now finally hitting that cusp just this year of getting the validation that they need from some of the largest hospitals, at least in the United States, and kind of growing. I follow him maybe more of at a distance. We don't talk on a regular basis, but I followed him just to see kind of the evolution of his company and the story that he's had and the impact that he's making in a lot of these. So it's Raphael is the now executive chairman, but he was the CEO that I'm following recently, I would say.
Uh-huh. S- I have, I mean, I'm going to ask you some very stupid question if it's all right with you.
Of
Uh,
course, ask away.
what's the funniest pitch that you've ever heard so far?
Ah, the funniest. Hmm. There is a lot of interesting ones. Um, I on the funny side, I mean, there's some weird products that exist today, but I would say maybe the most shocking that I handed to was actually one of the first pitch meetings I ever had. It was about 7 years ago, and it was a founder who figured out how to predict earthquakes to the exact location, time, and size. And at the
Really?
time, I worked for a Japanese company or Japanese investment firm. And if you know, Japan has a lot of earthquakes. It's a very big problem. A lot of people get hurt. And so when he was pitching to us, uh, his idea of this product was not to give it to the public or allow the public to access this information, but to be able to sell this to insurance or insurance providers or hedge funds so that they can hedge against earthquakes in these events. I don't know if the technology actually worked or not. It was still kind of relatively early stage, but as you could tell between our founder who wants something like this thing should be public and him, we got a pretty heated debate, almost a yelling match. And then we were based in California at the time. And if you know, California especially is built kind of close to a fault and has earthquakes and has had big earthquakes in the past. So we decided to end the meeting. Neither of them wanted to talk to each other. As he was walking out the door, he turned around to us and he told us, well, there's going to be an earthquake here in a couple of years and you're not going to know about it. He slams the door on us. So I guess we will never know the earthquake that may happen in California. But yeah, I would say that was the craziest. I don't know if that counts as funny, but funny to look back on, but absolutely crazy.
You'll be surprised when you talk about earthquakes because I studied in California. I mean, and the fault line runs right under our stadium, the Cal Stadium.
Yeah. It's crazy. It's but again, I don't know. We didn't have due diligence beyond that if he actually could or could not predict, and I don't think he would be able to. But yeah.
So what exactly? So why do you still remember him for his intemperate remarks, or why exactly?
It was yeah, it was just the setting. I mean, we're talking about people's faces red, almost throwing in a meeting. And it almost got to a boiling point, and it was more or less the intensity, the actual conversation. I don't know if that may not be. I would say that if you don't think there's an investor that's a good fit for you, don't get into a yelling match. It doesn't benefit anybody on both sides. So
needless to say, he never got his second meeting with you guys.
no, well, I don't think he wanted to meet with us again, and our founder didn't want to meet with him either. So yeah,
Makes sense. Total sense. So founders, be respectful to any investors. You never know when you're gonna meet them again.
you would be surprised. Even though it's a big ecosystem, it is still very small, and you're going to run into the same people over and over again. So just even if some people I'd be honest with you, there are some investors, absolute jerks, and there's some founders that are jerks for no reason, and they can really get under your skin, but you will run into them, and you might sit in a panel next to them. You might run into them to a private event. You might have to participate in the same thing. Maybe you might need to help each other one time. So I would swallow your pride. You could avoid people, but I would recommend not to burn bridges if you're
Absolutely.
dedicated to be a startup ecosystem.
I mean, it's you run a fund, a structured fund, and we invest as a business angel. Me and my partner. You would be surprised. We get pitched often, and often it's from a standpoint of entitlement. Just because I'm building something, you need to pay me. That's something which we've seen. I wouldn't say it happens all the time, but with an alarming amount of regularity, and it's surprising.
Really
Funny. I
I
mean,
could see it.
every time we read about a earthquake, I'm sure people are going to remember this founder.
See, yeah.
So,
Oh
I
yeah.
mean, I'm going to just flip to a very specific to some of your experiences that you've gathered all these years, and the question which ask you here is what exactly, and I'm sure you've met so many people and you've written checks to people, what is an entrepreneur mindset which you recognize that is different from the rest, which basically helps you predict that this person or team is should we fund or not? What exactly, what are your thoughts on that?
Yeah, I to give perspective for my just MDI over the last 2 years, I've physically mapped, like I've written in a spreadsheet, over 22,700 companies from 10 different industries. I've written almost 2,000 pages, like physically writing about what makes them the best companies, how they differentiate, and what's interesting. And then I've connected probably with almost 1,000, maybe 1,500 founders that I think are really impressive. Um, One of the things that I learned, one, I've seen founders that come from nowhere and be successful. I've seen founders that have worked in an industry for a very long time, understand everything about that product, and the best companies in the world found success. I've seen people go to Ivy League schools and find success. I have people, not even have a college degree and have success. So you can find success in any entrepreneur. What are the people that tend to do really well? I spend all my trying to understand an industry more than, or at least as much, if not more. And I I think the founders that really stand out, just they have a really good. There's the first aspect is and I think this is probably very important too, is they have a really, really, really good understanding and grasp of what they're actually trying to. If I'm building a product for a specific industry, let's say it's for agriculture, and they truly understand the dynamics of the industry, how the business works, the customers that do exist, like what is the actual problem, the problem that does exist, and why that is a problem, how they can get on top of that, whether or not they can build the perfect product today or tomorrow or sometime in the future. I mean, having a very good understanding of what they're trying to accomplish versus like, hey, I think it would be cool to start a farm analytics company, and people would buy it because it's innovative. That's not always innovation. Doesn't mean that there's going to be success. Um, so people that's one, and then two, the other aspect is resilience. The one thing that I really like about entrepreneurs is that it's a blessing and it's a curse. I say it because you have to be able to go. You really have. Some of the founders will go the extra mile to see the company become a success. Yes, there's the standard market fluctuates, and there's good times and bad. Sometimes it requires you to put in a lot of extra hours of work. I don't. Working hard is the challenging point, by the way. I don't think like you have to work 100 hours a week. Can you do it or not? I think people can do that. I think the challenge actually comes when you have to make sacrifices. Are you going to pick time over your family? Are you going to prioritize your company over personal events in your life? Are you going to, if you get 1,000 no's in a day, are you going to give up because you just kind of feel like you're not necessarily, um, feeling that, uh, uh, there's an actual fit for your product. A good example, and I'll go back to the founder or the CEO that I'm following, Raphael, who's building that healthcare company. Uh, his father was killed in a hospital. He wanted to change that, and he did everything in his power to try to convince what I think is the most difficult ecosystem to break into, which is healthcare. Almost impossible. To completely change and disrupt hospitals. He wants to remove hospital buildings. They're to no longer exist by building virtual beds of high acute care, which is, again, these are people that are on the verge of dying, but not actually going to die. They just need serious medical attention. Can you move that into the home? He had this idea and pitched it to hospitals 5, 6, 8 years ago, and no one was interested. They're like, good luck. Providers, hospitals won't even talk to him. So he built his own hospital in East Coast, in New York. So the resilience to be able to figure out, one, how to do something like that, and then be able to execute on your mission and then see results and prove out that what you believe in and the vision you have, there's a product market fit for it. Yes, there's iterations on the process. You can't be blindly dumb and run into an industry and think you can do whatever you want. And, you know, that you have to get feedback from the market and kind of iterate your product. And then after that, continue to call hospitals around the country and still receive tons of rejection, even though he's had improved his product, only to get a couple hospitals to jump on board that willing to figure out how to find the sweet spot. Now the largest hospitals in the world are, you know, working with them, to even the government of the United States is rolling out their product in different states in the country. And then after this, you're going to start seeing them go a little bit more global. But it's resilience. It is this ability to, and the reason why I said it was this blessing and a curse is the second half, beyond just understanding your ecosystem very well and why you're building the product, is it's a blessing because it gives you that motivation to really carry through when things are hard. But it is a curse because a lot of times you're going to be faced in a situation where you have to make sacrifices. And the sacrifices aren't pleasant. It's not sleepless nights. It's, can you tell your wife that you can't necessarily spend time with her when she wants to spend time or needs it from you because you have something from your company? That's, if you have children, you know, are you going to miss a children event of yours because you have something that you're working on? If you can find the balance, great. And I recommend finding balance. Don't overtax yourself and ruin your life personally. But if you can carry through it, and if you have that weird time that'll force that's something that we see in some of the most impressive today. Sometimes you don't have to get to that point, but this drive is really interesting.
So thank you very much for this. I think this is very insightful, and I'm sure my fellow founders on the platform are listening to this and probably making their own, know exactly what to do. And it's pretty inspirational. You know, if I don't find fundraising this way, I'm going to go down that way. So that's what you call pivot, right? That's amazing, amazing. And this one was a big one.
Yeah.
I have, if you don't mind, I'm going to also start taking some questions from the audience here.
Of
And
course.
there's one question coming in from Avdesh Sharma, and he says, what is more important for investors, business idea or team?
Typically at the early stages, it tends to gravitate towards the team. You know, there's so many people that have great ideas, even myself included. I think I have great ideas, but it doesn't mean I can execute on them. There's a lot of, I would say, wishful thinking about what is possible. But more times out of not, many of the investor meetings that I've been in with myself or my team or other VCs, a lot of times they're going to bet on the team that has been proven that they know what they're doing and why this is a problem and whether or not they can actually execute on a problem like this. And is a little bit more realistic of the challenges ahead and how to project, you know, their growth and the requirements that's needed, as opposed to someone that says you can build anything, everything is possible, and here's the hockey stick. It's just, it tends to gravitate towards the team. I would say later stages, it is a team is still a very huge part in the success of the company, but figure if there's a product market fit and the business model is a great fit, especially as you kind of carry into Series C plus, and seeing whether or not the company can sustain itself long term, you want to really make sure that there's a business model that is fit. But that's not really as important. Team overall tends to be the most important across all stages of the company.
Great. Thank you for that. There's another question from Ramon Jimenez, and he's asking you, can you explain how corporate venture is different than the venture capital? And should entrepreneurs pursue corporate ventures?
Yeah, so how it's different, it depends on the corporate venture fund. There's a spectrum, I would say. There's corporate venture funds that act as a traditional venture fund. It's just that their biggest LP is a corporation. So for example, Sapphire Ventures, their big is SAP, but they don't, none of their portfolio, nor is their mandate to connect their investments with SAP. They just have SAP's their single LP, and so they just run that fund how they would be a traditional fund. On the other side of the spectrum, there's people like us who tend to be more of, we can't nor won't make an investment unless we know that there is synergy that we could build with the business group. And so when you look at that on the outside in, you know, getting investment from a corporation, I think there's a great signaling play. You know, it's validation. The corporation really believes in your product. It's fantastic, and I think you that's some there's a signaling play in that. Side of the spectrum, you know, corporations I think can be really beneficial. I think there's investors that don't like the idea of corporations investing in directly into startups. But the difference between us and, let's say, a traditional fund is a traditional fund will try to, you know, they give the advisory, the support, and then try to introduce you to their partners and customers that they know that could be a customer of yours and help grow your company. For us, we have a direct impact on ways in which we can try to help grow our the companies we invest into. A good example, we can open up our customer base of 160 million mobile subscribers and immediately turn, you know, put $10 million on your revenue sheet. I mean, that's a huge and significant change that we can impact for the companies that we have, or we have access to, you know, for example, the government space program, who invest billions of dollars a year, and are trying to work with companies that think would be a good fit. We have the ability to tell the government to work directly with you, and because we're the government trusts us and our opinion, and we have the ability to help guide the government in working with companies that we think would be a better fit. For us, we think our biggest value add for corporations that tend to be on the synergy side is that they can actually add revenue to your bottom line. Are all corporations great? Some are wishy-washy. I mean, some are may not be helpful. And I'll be honest, there's some companies that we invested in early on that we thought would be a good fit, and we tried, and it didn't work out. And there's not much help that we can offer beyond that. So we're kind of limited as well in the support that we can provide beyond just the telecom group. So that's, but I think CVCs are fantastic. If you get a chat with any, I highly recommend it. And I think it could be very valuable long term. And I don't think there's good and bad working with institutional funds or corporations. There's a weird mix of, I think, investors that try to talk down on other investors, and I don't think that's a good thing to do. I think all investors are great in some form or fashion, and some of them offer unique perks or advice or guidance more than others, and some focus on different areas, and a big job of the founders trying to figure out what investors might be for them. And that might be where DoDash comes in.
Absolutely. Yeah. Thank you. Question from Vijender Singh, and he's asking, how many startups are funded at ideation versus how many are funded at product level? I'm assuming this is related to your fund, not in general, because ideation stage, uh, I'm not sure if very many get funded at ideation stage, but then I could be wrong.
Yeah. Well, we, as a corporation, especially for our size, and I would say most CVCs, it's very difficult to get them to buy in at the earlier round. Most corporations are more conservative investors. They like to see a little bit more traction and product market fit. And a lot of corporations, especially in Southeast Asia, don't like to be first, unfortunately, which is an oxymoron. We're venture investors. We're venturing into innovative companies that could have potential, yet we're conservative about it. So I understand the dynamic. But yes, corporations, there's no ideas that end up getting funded. Sometimes, you know, instances where, like, the former founder of Android, Andy Rubin, for example, he was going to start a phone company, and we talked with him early on before he put his own money to work and was manufacturing some phones on the side. And he was able to raise $300 million at $1 billion valuation without ever having to release a phone. And so that exists. Sometimes it's very rare. You'll have some of these. He was the founder of, of Android. So it's, yeah, some investors will throw money at that. but you know, that company never really went anywhere. And time again, people slowly learn that it's so much more riskier just throwing money into something that hasn't found product market fit or way into the market than we should. Good example, we're happening in SPACs, especially for the EV market and
Oh,
a lot
yeah,
of the automotive space.
yeah.
Is yeah. So, anyways, it's less on the ideation phase. You're never going to find money. If you do, congrats, but you're never going to get money for an idea, unfortunately.
Yeah. Thank you for that. That was my feeling as well. A follow-on question from the same gentleman. Uh, what about which is a better investor? One with enormous money or the one with reach and expertise but less money?
I don't think there is one that's better. I think they're equally beneficial. Um,
Get them both on the cap table.
yeah, I mean, you have people like Tiger Global Management who's spending tons of money left and right and closing their eyes and signing term sheets and investing in any company that moves. But at the same time, I think, you know, if you can get someone going to be a little bit more strategic in helping you understand the ecosystem, maybe open some doors that you might not easily be able to get open. Yeah, go with that. I mean, there's no, you know, I think there are some investors that are going to definitely try to push you into saying how much equity they want on the cap table. And there's economics behind that, by the way. It's not like they're trying to be aggressive financially. If you don't acquire a certain amount of equity on a cap table for some of the fund sizes that exist today, it's just not possible to achieve a practical return. And some people, I think, tend to think of that as people being a little bit aggressive, but these investors have to respond to their LPs.
Got
And
it.
so they have to be that. But I do think that as a founder, if you can be selective, get as many people as you can on the cap table. I think there's no, I there's a lot of value in working with partners that can help you in different settings. And if you can get both, get both. I don't think there's one that's better over the other.
Okay. There's a very interesting question coming out from LinkedIn. I think one of the audience participant from LinkedIn is called Uda, and he's saying, "Do you invest in startups in Africa?"
We do, we haven't, I would say, uh, put it this way. My day in and out is I'm looking at, I literally have spreadsheets of companies that I go one by one and look at one industry at a time every month. And I look at every company that's the most innovative in the world and I try to figure out what might be the best fit for our group. For example, we looked at healthcare last and we mapped out, you know, 7,000 companies globally, mostly those that have raised some form of financing that would also be at a good spot. And one of the things that you learn when you map out industries, there's certain regions of the world and certain founders that just really figured out the sweet spot. And you know, we learned that there was a great company that was in the data management, healthcare data management side that was out of the UK that we thought was very innovative. There was healthcare equipment that was absolutely impressive out of China that we found really impressive. There was a healthcare imagery company that was based out of Israel that really blew us away, or a couple that we ended up having conversations with. There was companies that obviously the hospital services, I talked about Raphael, he's based in the US on the East Coast. That was impressive. I mean, the world now, and one of the things that I think you have to, I think there's a change slowly happening in the venture community uh, for some of the larger funds. They're becoming very data, which means they're building up these massive databases, and they're using a handful of tools that, you know, can pull insights from other locations, but also uh, they do a lot of filtering, whether it's their own team or they add things on top of that. And they're trying to quickly get to a decision about what would be innovative companies in a particular category that they would be interested very, very fast without having to pay hundreds of thousands of dollars a year. And there's a lot of funds that are starting to do this. And so because of that, it's having an awareness of your industry, your ecosystem, not only locally, but globally, is really, really I think, because, I just had a conversation with a company based out of Europe the other day that was looking at HR technology. And my biggest question is, okay, how do you differentiate, or what makes you most unique for not only your region, but also globally? And I think global world, and where I think people going after companies that are going to kind of go after global opportunities, but it doesn't necessarily mean you have to be a global company to find success. If you're going to be built out of Africa and you have a use case for Africa, and that's going to win in Africa, and you don't need to go anywhere else, and you can get to a sizable company before you could exit and give promise an investor some form of liquidity in the future, do that. I mean, that's fine. There's also companies that go that route, and it's up to the investor to figure out what they'd like to participate in. Do you think Africa's not? We haven't made any investments in Africa. I don't know how the legal team feels about corporate structures in Africa. We haven't thought about that, but for the most part, we're very open. We can make investments. We are currently looking at companies in Africa in the agriculture side, because I think there's some innovative companies, that make sense, that understand the system, that probably overlaps with farmers in Southeast Asia and specifically Indonesia. So there's always an opportunity. So yeah, I don't know. I hope that answer. That was a long-winded answer.
No, that's good. So basically, what you're saying is you're not averse to investing in Africa. It's just that really need to understand the corporate structures better and finding good deals, which at least are, or potentially, come through DoDash eventually, which have at least the data sets properly in place. So
Yeah.
I actually have been wondering about the healthcare that I just wanted to circle back briefly to your health tech. How do you balance speed and agility with the responsibility of in health tech? Because it's kind of health tech is a long play compared to other marketplaces or platform driven businesses.
Yeah, I think the beauty of us being a synergy-based investor is we don't necessarily have an aggressive timeline that we have to meet
Got it.
for a liquidity event. So healthcare, yes, you're right, long sales cycles. When we map the ecosystem, the healthcare industry actually has one of the lowest liquidity rates compared to most other industries, meaning of the companies that exist, what them actually end up exiting. And that's pretty low if you compare it to, SaaS solutions or others, and the reason why is there's very limited buyers. It's really complicated. You have to have a great distribution strategy. You have to figure out you have to work through the complexities of the payer ecosystem. We've seen the rise of telemedicine be pretty quick, only because you're not limited to the infrastructure of healthcare in either country. You can go fee for service, market directly to consumers, and that's done, that's done its course, I think. But for the most part, that's where we took healthcare in the perspective of this. Unfortunately, Indonesia doesn't necessarily have the best health.
I think your frame freezed again.
Yeah, let's see if that comes back in a second. I think that's fine. And meanwhile, I think, Nikhil, we have a couple of startups here, people's questions, if you want to take anything up on that.
Yeah, absolutely. What other questions do you want me to take?
Checking.
So there's a very interesting question from George Swingle. I see that. What are your ideal financial factors you like to utilize when evaluating a fintech startup? Oh, I think there could be tons of them, right? But again, it totally depends what kind of fintech startup you're talking about. So, however, I think in case of fintech startup, I think more the merrier. The more KPIs you're tracking and you have something to demonstrate there, I think it would be helpful. Kyle, you're back.
Yes, I don't know why my Zoom just decided to.
Not a problem.
It's funny when you do tech conferences, there's always tech problems. It happens to me all the time. And I don't know. I don't know where I got cut off, but I hope that answers questions.
So there's a very interesting question from George Swingle, and I already attempted to answer that. What are your ideal financial factors you like to utilize when evaluating a fintech startup?
I guess this is a bit challenging because, we're actually, it's really interesting because if you look at fintech in Southeast Asia, it's especially for lending solutions.
Seems like Zoom has some issues.
Zoom or internet bandwidth? It could be
There's something going on.
sometimes.
I guess, yeah, Nick, you can take further, I guess, while we wait him to come back. If you want to take on the other last question, or there's some more ones, if you want to take some of these.
So there's very interesting case, the question which I see that somebody is trying to raise capital for building out incubator and accelerator programs for early stage companies. That's a services play. I'm not sure if it's a VC play.
Yeah, maybe you can share with Nikhil on like services. I think for some founders that might not be clear, like why that's maybe not the best case.
So see the fundamental difference between a startup. Startups are designed to multiply very, very quickly. Anything which has got, it is repeatable day and night. An accelerator program is a different play altogether. It's a service. It's that's fundamentally different from a classic VC play. So I mean, I was again welcome back, Kyle. I again tried to answer another question. There's somebody who wants to raise capital for building an accelerator program for early stage companies. Do you think that's a VC play?
They want to, sorry, a venture capital program.
So they just want to build an accelerator program for early stage companies.
Mm.
Do you think it's a VC play? Unless
No.
you, pardon me?
Normally VCs, I don't think, are putting money into accelerators. Some are if they have a very niche focus and they're tackling, I think, an emerging category that people are not well aware of. And that's more of a fund of fund investments. If VCs allow that, you have to have, most GP and LP agreements, there's a written structure and you can't change that off of a whim. You have to follow the road promise to LPs. I don't see a lot of VCs putting money into accelerators as often, but there are some, and corporations do. Our corporations most likely are more likely to be putting money into the accelerator than a traditional institutional fund.
Correct. So, but in that case, then it has to be sectoral rather than early stage.
I mean, yeah, you could try to compete with some of the bigger early stage companies that exist today, or early stage accelerators, like whether it's Y Combinator, 500 Startups, New Chip. I mean, there probably is an opportunity for it. We started an accelerator. We started many accelerators, by the way, as a corporation locally for early stage startups within Indonesia. And running accelerators are tough. I mean, you're talking with, it's one of the riskiest categories. It's really, really hard to win. For us, it was less about the money and it was more about government trying to really boost the startup ecosystem locally and give those founders that tend to have a much harder time going from 0 to 1 a better chance. No, I think it's tough, but it depends on the ecosystem and the purpose and the opportunity that you might see.
Got it. So this is one question from my side, Kyle, and that is, what are the recent startup ideas that you've encountered that deserve more attention? They don't seem to have caught the attention of the investors yet. Any ideas out there? Any thoughts?
I think there's a ton of stuff in there. there are so many companies that are going after states, better focused on providing either hardware, software, or a combination of the two, catering to inefficiencies in processes. There are, a handful of healthcare activities that, uh, need to be, I mean, they're just because there's innovation within the space, there's an impact in human lives and there's an improvement. From an investor standpoint, I think you have to be a very specific investor to wanting to venture into that space. But from just generally coming as a perspective, I think it's an incredible space to be in. Um, I don't know. I mean, if we had an hour, I would tell you every industry. I think what are some of the most interesting categories to go after, subcategories in every industry, because we've mapped it. And we've already answered that question for ourselves. But we'll have to do another event.
We could do that. I mean, that's Michael, make a note of it. We're going to pick Kyle's brains on what are the upcoming areas our founders should focus on.
Sure.
Thank you so much for that. Probably I have time for last couple of questions. Um, there's again a follow-on question from one of the gentlemen who came in earlier with his set of questions. There are tons of VCs with B2C products in mind, but there are way less who want to understand the marketing and sales in B2B environment. In such case, what should be the ideal strategy for the startup for choosing the VC or investor? And I have a follow-on question with that. Yeah.
It's really interesting because I know we only have a couple minutes here. A best strategy is do your best to look at what is the investment thesis of the investors that you're trying to reach out to. There's generalists that, their thesis is pretty broad. There's, investors that, especially if they have an industry focus, like to go after a specific vertical. It's kind of funny because we're a giant telco, and all the telcos who have CVC funds from around the world, whether it's Orange or KDDI or Verizon, we all got into a room and thought, should we start a fund together? Because obviously we have the most influence as a telco, and none of us could agree on the investment verticals that we'd want to go after, because we all have very different investment thesis. And I think every individual investor has that as well. So it's really important for you to kind of figure that out, and whether or not cater to that, or realize that that's not the investor that's for you, and try to figure out the next one.
Got it. So, I mean, again, this is going to be a very basic question just towards, closing our session. What are the kind of rookie mistakes you've seen startup founders making while approaching you?
Yeah, there's a handful. One, if you're doing a cold email, first, I'll start there. It shouldn't be like, hi, would love to chat about my product. It's like, there's too much I have to volume I go through a day. I can't just have a friendly conversation, even though I'd love to. And I think most investors are the same. If you have a short and sweet answer on the product, the technology that you built, why that's important, but also the traction that you've made, that tends to be a great, that's the investor's filter. And if you can give that information up front and not waste their time, I think you're going to have more success in actually having a conversation with an investor and kind of following up. That's a really big mistake. The second mistake that I ended up running into is, again, I think there's a handful of founders that don't truly understand their industry as much as they should when they're building a product. And what do I mean by that is if you can't tell me that I know all your competitors, I know all of them, what makes them interesting and makes them know what they're unique. I know exactly at a feature level what's unique about them, especially when you talk with tier one funds, you're gonna experience that. And so if you don't understand that more than I do and understand the customer more than we would understand the customer, I feel like that ends up being a really flat conversation. And it's detrimental, because I think it shoots yourself in the foot. I mean, really, truly have an understanding about your ecosystem, how you compare it to the other companies within that ecosystem, why, either regionally from a timing perspective, why maybe you're the right team or you have, that it's going to enable you to really kind of accelerate and build that traction that's going to find success for you and your investors. And I think if there's a compelling story behind that, great.
Got it. Got it. Thank you so much for this. Before we wrap up this session, I have one last question, which I'm sure a lot of people would
Yes.
want to hear your answers to, and that would be, how should they reach you?
I'll type my email in to the chat.
Yeah, that'll be great.
There you go.
That's
That's how you reach
awesome.
me. It's Kyle at MDI.vc.
Thank you so much. I really appreciate this open conversation.
Likewise.
Your insights were absolutely valuable. Let me ask the people on the chat, did they enjoy the session?
Hope so. I apologize for falling out a couple times. I don't know what's wrong on my side.
Yeah, I think people are writing in the chat. A couple of ones wrote accidentally to me personally, but I get like flooded by like fabulous, wonderful, awesome.
Great. I hope it's helpful.
Thank you, Kyle. Thank you for your time, and thank you for speaking with Dudash. And I'm going to take your
Likewise.
offer up on speaking about the future trends of businesses which you would like to see a lot more attention from VCs. So
Yeah, absolutely.
we're going to have a separate session on that.
Okay, for sure.
Thank you so
Awesome.
much. And I wish you a
Likewise.
great day ahead and much appreciated.
No, thank you.
Thank you,
Thank you for the
everybody, for
time.
joining in. And if you have any questions, feel free to write to us and join our community so that you have everything that you want to know. And let's see how, we're going to have some interesting conversations going on. And we have the next session. Michael, can you announce the next session for June already?
Yes, we have. That's on the last Tuesday, as always, on the 29th of June. Time starts like 1 hour earlier, so 5 p.m. Central European Standard Time, which is with Bloom Ventures.
All right. Thank you very much. And we're going to let you go. Much appreciated. Bye-bye.